Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, this is daily video update from the ForexPeaceArmy.com. Today, guys, we again will take a look at the euro currency. Actually, initially I thought to prepare the update on Great British Pound because today the new research from the Fathom Consulting has been released on the perspective of the rate cut by the Bank of England, and they are talking about the high inflation and some contradiction with this situation. So they think that Bank of England really could cut the rate despite the high inflation. It was really very important research for us because it could become the very good fundamental background to our technical analysis. Since we also suggest that Great British Pound should drop more, and this research is very important, and it has been released in a good time. So that's why I suggest you could read it in our weekly research. But after that, I have taken a look at the chart, and it seems that on the Great British Pound hardly we should expect something really significant. Well, maybe we will prepare the daily update on the Great British Pound, but on the weekly chart and on the long-term charts, it's not really very interesting situation, mostly because, guys, the short positions on Great British Pound are overloaded right now, and that's why it has really limited downside potential. That's why I have decided to take a look again in the euro currency, because on the euro situation is more active and more dynamic, and here we could get some setups on the coming week. So this was a bit a dramatic action on Friday, since we have got 2.9% of gross domestic product release. But as you can see, the opposite reaction on the markets. What the reason? The reason is, guys, in the consumer spending. So as you know, the consumer spending in the United States takes 70% of the gross domestic product. And the numbers of the consumer spending was 2.1%. That is 2 times lower than in the second quarter. That was a negative sign, because many analysts think that the Fed Reserve mostly take a look at the consumption and the personal spending rather than overall gross domestic product numbers. And this is the major determinant factor of the gross domestic product, I mean the consumer spending. That has led to the opposite reaction on the market. That's why, guys, as I said many times, that I do not trade the data releases, because this brings more negative results rather than the positive. Because first you see the breaking news, for example, on the Bloomberg, that the GDP has increased to 0.9%, and you can see that the market moves in opposite direction, and you just can't understand what's going on. Because in the same time and in the blink of an eye, you can't just get information on all components of the gross domestic product to see what the reason for that. And when you have got the reason, when you got the idea what is really going on, markets are already very far from your position, or maybe your stops already have been triggered. So that's why this is the fact that you can't control. It's for me is some kind of the forbidden topics and forbidden objectives for the trading. So if you can't control the data releases, you can't control the information that you will get, it's better to not trade it. It's very simple. But many traders makes money on that. So it's I don't want to say that this is the bad trading style, but this is just not suitable personally for me. So that being said, despite how it really stands right now, we've got nice upside rally on the euro currency. If you remember, our major area that we have discussed recently was 109 level, and we said if market will drop below 109 after gross domestic product release, that could be the signal of the reestablishing bearish trend. But as you can see, this hasn't happened. Market has held above this. We will see it better on the hourly chart. And in fact, it has completed the target in the last week. So as you can see, it has reached in 110 area. That was the confidence resistance, and is the confidence resistance on the here on the daily chart. And also market has doubled the retracement, harmonic retracement to the upside. So the objective point for the last week has been completed. So what's next? Actually, guys, here and the next week we probably will have the tactical tactical task that we will have to deal with. And this tactical task stands with this upside retracement. But if you will take a look at the weekly chart, you will see that all this combination is the very good looking bullish engulfing pattern. And bullish engulfing pattern suggests two-leg upside action. So it means that on the daily chart, we should get some kind of the AB, CD action to the upside. As a result, we have two major tasks. First is we will deal with this potential pattern that we will discuss right now. And second, we need to estimate the potential target of this upside retracement. So as you can see, on the daily chart, we could get nicely looking bread and butter sell pattern. We haven't got it yet. It has been confirmed yet, but the perspective of this is very good. Because take a look, we have the nice thrust down. Although I really do not like these two long shadows here and multiple upward retracements, but in general, all of them stand below the 3x3 moving average. So 3x3 envelops them very good. That's why I think that in general we could try to use it as the thrust for the bread and butter. Seems not really bad. Maybe it will work. At least it is also supported by the pattern that we have on the weekly chart. This overall bread and butter setup. And precisely speaking, bread and butter, in fact, to return back to the target of the bread and butter, could become the BC leg of the potential ABCD action. That's our idea that we could get on this chart. So on the daily chart, we will be watching for bread and butter sell. For that, to get it, we need to see area around major fib level. As I said, this could be 3.8, 110.30, 110.50 area. As you can see, 3.8 resistance, or who knows, maybe market will reach even 10.64. This is the 50% level, and we know that euro currency likes 50% levels. As soon as market will reach it, we need to check for reversal patterns on the intraday charts that could give us the signal for taking position based on the bread and butter. That's major idea. Now let's take a look at the hourly chart. On the hourly chart, you can see that's level that we have talked about, it's 109, and you can see market has stand above it, so no breakout has followed. That's why we've got our signal on the possible downward trend continuation. This market instead shown this rally up. In fact, guys, we have here we got this 222 by initial AB action, BC leg as the ABCD retracement, then upward continuation. Now you can see that market has hit 100% objective point. Here we see the signs of the acceleration, the thrusting action, and if you're trading on intraday charts, guys, this thrust you could even use for also some Jordan pattern. Maybe it will be bread and butter, maybe double ripple, who knows. But if you're trade on the lower time frames, you probably could use it for that purpose. This very fast action that market has reached directly 100% extension without no pause and 618 target makes us think that market really could continue to the next destination point, 1618, and that stands around weekly pivot resistance 1, and this area is 1040 approximately and stands very close to this resistance. So by this action, market really could give us the setup of the bread and butter. Still, right now, we do not see any reversal patterns here. That's why it's not time to think about going short, and it's not time yet to think about the taking position based on the daily bread and butter. So first, we need, as I said, reaching of the important fib level. Second, we need on the hourly chart some reversal pattern that will let us to take the position. So that's why in the beginning of the week we expect some maybe minor bounce here. Most probable level that market could reach on this retracement is the cluster support around weekly pivot point. Weekly pivot point to previous tops. As you can see, this normal natural support resistance area, and also take a look confidence support on the hourly chart 109.30, 109.37. So if market will show retracement down, this strength of this level should be enough to keep market here and to establish an upward direction. If, of course, EUR currency is really bullish in the short term and if it really has intention to continue move higher. So if market will drop below this level, this will be a very negative sign because this really strong level, and in the normal behavior of the bullish market, the strength of such kind of support should be sufficient to keep market and to provide support and work as the platform for establishing upward action. So that being said, on the EUR currency, we will be watching for two things. First, on Monday, it's minor retracement down to the 109.30. We will control whether market will hold above that area or not. If everything will be fine, we will be watching for upward continuation to 110.40 area. And there, since this will provide the setup for the bread and butter, we will be watching for possible reversal patterns that will let us to think about taking the short position based on the daily bread and butter sell. Maybe this will happen already on the next week, who knows. But in general, the short-term trading plan looks as follows.